Most people don't actually choose their 401k investments. They default into something. And most of the time, that something is a target date fund. Now, target date funds aren't necessarily bad, but as financial advisors, we see the same problems show up again and again, and most people aren't even aware of it. Hey, I'm John Scriffiny, Regional Vice President with Florida Financial Advisors. Today, we're going to cover a few things that often get overlooked. First is what a target date fund is. Second is what a target date fund is designed to do. And third, why in a lot of cases, they're actually falling short. Now, the goal here isn't to tell you what to do. It's to simply help you understand what's happening under the hood, see if a target date fund really is the right fit for your goals. So, what is a target date fund? A target date fund is designed to automatically adjust your investments over time. The idea is simple. So, back in the day, when people invested in 401k plans, all the funds were invested in the company's stock. So if you're to work at AT&T, every dollar you put in your 401k, if you didn't go make proactive changes, would be invested in AT&T stock. If the company started not doing so well, and they laid off a bunch of employees and their stock price crashed, suddenly not only did you lose your job, but you also lost your retirement. The idea of a target date fund was come up with. It's a diversified portfolio to make sure that you're not invested just in one stock, so your money will grow over time, and they align the risk with how much time you have before you retire. So for example, if you're in a target date 2050 fund, they invest your money as if you're going to retire in the year 2050. It's more diversified than a single stock, it makes sense for a time horizon, and it grows over time. On the face of it, it sounds actually pretty good. So, we now know why target date funds exist, is to replace individual stocks. Let's dive in deeper into how they're made up and what they're designed to do. So, how a target date fund is designed is it's dependent on your projected retirement year. So for example, if you're 25, you'll most likely find yourself in a target date fund 2070. With the target date fund 2070, the creators of it basically thought, hey, you have a good amount of time before you retire. We should be more aggressive with your money because if the market loses, you'll have time to recover, and we shouldn't have too much in bond funds that are more designed to be safe and don't offer too much in terms of performance. If you were 65, right, you'd probably find yourself in a target date 2030, right? So with the target date 2030, they have less of the pie chart split up into equities and more of the pie chart split up into bonds. That way, since you're getting closer to retirement, if we see a big drop in the equity market, you'll be a little bit better protected because you have money in bonds. So they're designed to give you a portfolio that automatically rebalances into a strong portfolio to put you in a good position whether you're 50 years away from retirement or 5 years away from retirement. They sound great on paper. The closer you get to retirement, the less risk they take on, and if you're far away, they grow a lot. But in practice, that's not really what's happening. If you or someone you know is invested in a target date fund, it could be the right fit for you. But in a lot of cases, there could be better options on the table. So I'd encourage you to take a look, not necessarily to make a change, to make sure that you fully understand the strategy you're using and it makes sense with what you want to accomplish. If you enjoy content that breaks down financial topics like this in simple terms, consider subscribing. And if you ever want to connect with our team at Florida Financial Advisors, you can find us at www.floridafa.com.
This content is for informational purposes only and should not be considered investment advice. All investments involve risk, including loss of principal. Past performance is not indicative of future results.